cement the concept in our heads. On this slide is an example where there is a lessor Z who enters into an 8-year lease of 40 lorries with lessee M. The lease term approximates the economic life. There are no other features that indicate that the lease does not transfer substantially all of the risks and rewards incidental to ownership of the lorries. On day one, therefore, this is classified as a finance lease. At the end of year 2, lessee M decides to cease one of its business operations, because of which it needs to terminate the lease agreement early. They now terminate, or they now change the terms of the agreement such that the contract now terminates at the end of year 4. Early termination was not a part of the contract. This is therefore a lease modification. The modification does not grant M an additional right to use, and therefore it is not a separate lease. As we said, now the way we would need to account for this is we would need to say, on day 1, if I always had a lease of these lorries for a 4-year term, what would have been the lease classification? In this case, I would have concluded that the life of the lorries is maybe much more than 4 years. Hypothetically, if I had to assume 8 years, I would have said the life of the asset is not a majority of the economic life of the asset. Also, given that the life is now 4 years on day 1, the present value of lease rentals for 4 years would not have been substantially all of the fair value of the asset on day 1. I would have therefore concluded that this lease had been or would have become an operating lease on day 1. That being the case, we said there are 2 steps one would need to follow. The first step is to derecognize a finance lease receivable. Because this is no longer a finance lease, it's now meeting the definition of an operating lease. Bring back the lorries as property, plant and equipment, and the amount at which you would measure them, which is step 2, is the aggregate carrying amount of the assets immediately before the lease modification. And that is how you would have accounted for this particular modification. Let's look at one more example before we jump into the practical experience. And this is an example where an operating lease is modified into another operating lease. Lessor Y enters into a 10-year lease of office space with lessee X. Y classifies this lease as an operating lease because it does not transfer substantially all of the risks and rewards. The lease agreement specifies a starting rent of 1 lakh payable in arrears with an escalation of 2% per annum. And if one had to do the math, one would have paid 1.094 million over the 10-year period. The accounting for this is on a straight line basis, and the rental therefore that would have been recognized is about 1,09,497. Given the high vacancy rates in the real estate, both the parties have now come back to renegotiate the contract. And what they are saying is that let us extend this lease by another 5 years and let us revise the rental to be 1,10,000 per year for the remaining term of 5 years plus the extended term. Now what one would need to do is there is a payout of 1,10,000 per annum for 10 years, which would result into 1.1 million of lease rentals. But friends, remember there is a lease equalization reserve in the books of this company because their payout was different from the amount that was recognized in the P&L. That needs to be adjusted against this aggregate of the rent that will be paid over the 10-year period, and then one would arrive at the straight line basis of lease rental income to be recognized. This is a very quick summary of what is the new leasing standard or what is Ind AS 116 about. and what is the real guidance on modification for lessees and modification for lessors. What the practical expedient does is it says, given the current pandemic, many entities will expect to renegotiate rentals, renegotiate their terms of arrangement with the lessors, which would meet the definition of modification. In order to simplify financial reporting and life of participants, there are certain practical expedients that have been brought about in the standard. The first and the most important point to be kept in mind as we look through and work our way through the expedients is they do not apply to a lessor. So if there is a lessor who is giving a rent concession, the lessor has no choice but to apply the examples that we just saw. But for the lessee, there is a choice available if they want to take the benefit of the practical expedient.